Today, we have the amazing Emma with us, who is going to be talking to us about the Toronto market.
We look at months sales for actual January over the last 20 years. We're the second lowest. So we had a total of 3,100 trades that happened across the entire Toronto board. Whereas if you look like, 2022 and 2021, we're doubling those numbers. Yeah. So, and again, those were also crazy numbers.
Mm-hmm.
So if we look in inventory. Yeah, so if we look into like a more normal year, we're probably looking somewhere around like 4,300 to 4,500. 6,900 is also not normal. So we can't really compare this to this because this isn't normal either. This is crazy as well.
Mm-hmm. Yeah. So if anything, we're really low.
We're quite low, but I think it looks really bad if you're comparing it to 7,000 sales.
Yeah. It's not as bad as it looks.
It's not as bad as what the media can make it seem.
Yeah.
Right?
Hey everybody, welcome to the Canadian Real Estate Channel. I'm Jeff Barker. This is Dakota Warkentin, and we are the founders of Opinicon Investments.
Our big vision with Opinicon Investments is to help people generate wealth and to eventually achieve their financial freedom goals. And we do that by providing them opportunities to invest in different types of real estate. So that's a little bit about us and what we do. And today we have the amazing Emma with us, who is going to be talking to us about the Toronto market. She is a real estate agent in Toronto, and we are super excited to get the update on what is happening in Toronto.
Yeah, it's good to be here with you guys. I'm excited to have you as hosts. First time host, so I'm sure there's going to be lots of new questions, which I'm excited for.
Yeah, you'll probably have to repeat your story about yourself because we want to learn a little bit about you and what you do.
That's okay. Everybody loves to talk about themselves, and I'm no different. So yeah, my name's Emma Pace. I run a real estate team in Toronto called Monstera, and we help millennials transition from their first home to their forever home through strategic purchases by helping them, get onto that property ladder and continue to make those strategic purchases up to being able to get that forever family home for themselves.
Nice. I like that you have a main focus on millennials. That's really cool.
Yeah, it's actually a strategy that came, you know how they always say like things come out of innovation or things come based on your own personal experience, right? And so for me, essentially what, the strategy is that we run our clients through is the exact strategy that I used personally for myself to be able to get me into my dream home. And it was something that has worked really well for me. It's something that's worked really, really well for our clients. And so we kind of just stick to that. We gel really, really, really well with millennials. We kind of speak the same language and drink the same drinks and spend our time the same way. So we really, really enjoy working with them.
Love it.
Yeah, that's really cool. Because I know for millennials, there's a lot of talk about, millennials are never going to be able to own homes and it's very difficult to get into the market. And will a millennial ever be able to buy their own house?
Yeah.
So it's really cool that you're able to provide that as a service to millennials. And I'm interested to hear a bit about what that looks like. Because I think most millennials, especially in Toronto, probably think that they can't do it.
Yeah. I mean, here's the thing, right? With every purchase in real estate, especially nowadays, is like there has to be some sacrifice that you're willing to make. And so as long as we're able to have those open lines of communication with any clients or potential clients about like, hey, here's where you are, here's where you want to go, here's your long-term strategy, we can help you build it, but here are the things that you might have to sacrifice along the way for the greater good of your lifestyle in the future. Are you willing to work with that? If the answer is yes, great, we can help you. If the answer is no, that's cool too. It's just, I can't really help you at that point in time because there's a certain set of rules and guidelines that we need to be able to follow in order to have success, right? And so I think it's really important that we break down the barriers and we break down the mentality or mindset that like as young people in an environment that we're in right now, we can just go and buy our dream house on the first round. And I think, you know, as somebody who grew up in a suburban neighborhood in Canada, when we were young, that was actually a possibility. And so oftentimes I think what I've realized through having conversations, especially with millennials who were born and raised in like the suburbs, oftentimes it's like, I don't really want to make that sacrifice or downgrade into a condo, right? And those were challenges that I specifically had when I was trying to develop this strategy. So I was like, listen, these are the sacrifices that I'm going to need to make along the way if I want to be able to get to that end goal, because unfortunately I'm not 10 years old living in the suburbs anymore. So the world's changed a little bit, and I kind of need to get my expectations in alignment with reality instead of hoping or holding on to this hope and dream that things are going to be the way that they were when we grew up, because that's just not what it is anymore. Like, it sucks to say, but that's just the reality of it. So I think it's really important that we break down for millennials, like, it is possible. Because if you think it's not possible, you don't even explore the opportunity, you don't explore the options, you just kind of dig your head in the sand and you're like, poor me, this is never going to happen. But if you're willing to, like, you know, unfortunately shine a bright light on maybe the unsexy parts of going through this process to really get you what you want, like, there's this proven strategies to get you there. It just takes a little longer this time around.
Yeah. And are you willing to adapt?
Yeah.
And are you willing to give up avocado toast?
Yeah. Well, hey, man, I think you can probably still eat avocado toast. Yeah, maybe not spaghetti squash. I went to go buy spaghetti squash last week and it cost me $10 for one spaghetti squash. So I think spaghetti squash might be the new avocado toast. We'll see how it goes.
Oh no. Man, that's another faux pas added to the list.
Totally. But should we get into the numbers? I'll let you guys know about the Toronto market, and you let me know how we're comparing to Ottawa.
Absolutely. Yeah. Let's dive right in.
So let me share my screen. Again, that's if anybody wants to get in contact with me or learn more about my team, monstera.ca. And for anybody out there that is renting right now and is thinking about or contemplating home ownership, I put together a renter to owner guide, which you can download for free, completely for free below. And I basically went through 5 strategies for 2023 that you could utilize to transition from owning right now into renting. And so there's 5 different strategies in there, but what I like to do is like something called the strategy stack, where you might be able to choose, you know, 2 or 3 of those 5 strategies and pair them together to build a specific strategy for your unique situation. So if you're interested in that, download it below. It's completely free. Go through it and see if you can help yourself transition, if that's what you want to do. So let's go and talk about the market activity. So I like to look at year over year and month over month data, because I think the month over month stuff gives us a little bit more of a narrow scope, but the year over year lets us know kind of where we're coming from. So the numbers that we're looking at in this market report are obviously the numbers that have come out in January, because we haven't had the numbers in February released as of yet. So condos actually saw the biggest price reduction. Condos saw the biggest price reduction that we've seen in a little while. So we're down about 4% for the average condo price. So because you guys haven't, because we haven't participated in this conversation together, just to give you guys some context, if you look at kind of like the last 6 months or like the back half of 2023, we were probably hovering in like the mid to high 700s for average condo price. So we actually cracked to the lower side of the 700s, which we haven't seen in the last little while. So the average price for Toronto condos is about 711, but we'll go more specifically into individual condo areas to see like where can we get below that and where might we be trending above that. And then condo townhouses were up about 6%. So this looks like a big move, but we don't have a lot of sales activity going on. Like, we had the second lowest number of sales in January that we've seen in the last 20 years. So that number, because condo townhouses just don't have a lot of volume historically anyways, we pair that down with like a very low average year over year, and this number can be skewed much more easily. But if we're looking for condo townhouses, good news is it used to be closer to $1 million, and now you're looking closer to like 8 to 850 probably is what you're looking at.
Much
it's a big drop.
What's the average condo townhouse in like Ottawa or something right now?
Probably looking in the 6s. Would you say?
Probably 5s now. I think they were hitting 6s.
Okay.
I don't think we have a whole lot of condo townhomes. We have a lot of townhomes, but they're freehold.
Freehold. Okay, cool. Interesting. Yeah, see, with us in Toronto, we actually don't have a ton of freehold townhouses. When you get freehold townhouses, they're usually like the century home row houses if you're in Toronto proper, or condo townhouses typically. And then when you get out more towards the suburbs, that's when you'd see more of a, even mix of condo versus freehold townhouses out there. And then, yeah, we'll talk about semis. So semis stayed relatively flat. Average price point for a semi in Toronto now is 1.15. We saw that get close to it was 1.4. Yeah. So if we look as of last year, we were at 1.471. We've come down to about 1.15. And then detached properties went from 1.627 in December down to 1.48. Again, detached properties and condo properties actually have the most volume, which is interesting to see. But if we look at the year over year numbers, we're down about 20% for detached properties. We're down about 20% for semis, 13 for condo townhouses, 7 for condo apartments. I think these numbers are going to start looking pretty bad over the next couple of months for, honestly, most areas, not necessarily just Toronto, but probably most areas in Ontario, because as you can see here, this was the peak. And when the numbers come out next month, we're going to be looking at off-peak numbers. So it'll be interesting to see what these are showcased as of next month.
That's a good point.
But yeah, that's kind of where we're trending. If anybody's looking at just kind of like average purchase price in terms of what we're looking at. But I mean, overall affordability, just given like where interest rates are right now, affordability has come down about 30%. Just taking like the 2.5 to 6% rates where we're at right now. So if we look at kind of where prices have come down to, they've come down about 30%. So overall, yes, the purchase price is lower. And I guess the good news in Toronto, because we have double land transfer tax, so your closing costs and your down payment requirements are actually lower. So I guess the people who truly benefit from this particular market would be those who have a high income, right? And but maybe they don't have a ton of cash saved.
Yeah.
Right. Those people are probably the ones that are able to take more of an advantageous approach to this market, because you don't need as much cash on hand, but you still have the income to help you qualify. Those are probably the people who are looking pretty good. So, millennial professionals. If you're working downtown in the tech sector or something like that.
I'm curious what kind of conversations you have with your buyers, especially as you look at your year over year and, you see how different it was, say, when we get into, February, March. We sold stuff in February, March last year, and it was wild.
Yeah.
And people see that difference. What kinds of conversations are you having with your clients that maybe are either maybe they're excited about it, or I'm going to say probably are scared because they see what that difference is? And are you finding people are scared about it? Are they excited about it? And what kinds of conversations does that look like?
I definitely think the buyer mentality, as soon as we saw the year, like the 2023 timestamp turnover, I do feel this kind of like inherent shift from like extremely fearful to like a slight transition of I definitely don't want to say like overly optimistic, but like maybe slightly more optimistic than we were before. Because, and so to answer your question, the conversation always is and always has been, what the heck is your long-term plan and what do you want to do? But like, I don't, to be honest, like for lack of a better term, I really don't give a shit what's happening in the market. If you're telling me that you only want to own this house for 6 months, the conversation is going to be a hell of a lot different than you telling me this is my 25-year plan and I plan on having kids in this school district. And like the conversation is going to be different, and the advice that we're giving is going to be drastically different depending on your long-term plan. And that's like why for us, selfishly, it's no secret. If I work with millennials now, and I know I do a really good job, selfishly, I do a great job, like they're transitioning up and we have a plan. It's like, it's a long-term strategy for my business to make sure that we have success and growth over the next 10 or 20 years. And so not only do I think it is in everybody's best interest to make sure that like we're talking on a long-term time horizon to be able to get them what they want, not just advising on like the one deal that you guys want. It's like, it's way better for both parties to build this long-term relationship based on like, it's hard to say, but like, what does the 15 years look like in your dream world? What does it look like for you? Let's work backwards on like how we get that, because most people don't want to, like people are like, I want a condo now. And then in 3 years they're like, I don't really want this condo anymore. I kind of want a house, or like, I want a garage.
They've outgrown it.
Yeah, or they have a dog or whatever it is, right? So for me, I like to look at that long-term time horizon and then provide advice backwards off of that. But when it comes to right now, like this is my personal opinion, but I think that we have seen the bulk of the pain from a price reduction perspective. I don't necessarily think prices are coming back or like skyrocketing or anything like that. But in terms of the pain that we had felt in terms of price reductions, I think we've like materialized the bulk of that, because we're looking at about 30% from the peak in most places in Ontario. So that's not to say that I don't think that there's further opportunity for prices to fall. Again, I know we talked about this a little before, but every location or every suburban market or every even asset class within markets they're going to perform differently. Some may actually increase this year. Some are probably going to see further price declines. I just don't personally believe that we are going to see the same price decline in 2023 that we felt in 2022. So like my advice is always be prepared for that to be the case. I just don't think that we're going to see another 30% price decline in 2023 because we're already down 30%.
Yeah. I think it really boils down to what the interest rates do, because it's really affordability at this point, right?
For sure.
Money was essentially free at the peak. So of course people were running out there to buy something that maybe they wouldn't be able to afford if the interest rates changed.
Yeah, for sure.
Right.
And I 100% echo that. I think if rates continue to stay high, I suspect they're going to do for the remainder of the year, I think we probably just trade sideways. Maybe we grind down slightly in terms of pricing, right? I don't necessarily think we're going to see that same drastic movement up or down that we've seen over the last couple of years. It's probably going to be like a boring kind of sleepy market. But I think if rates are really high, we don't have a ton of sales activity. We don't have a ton of inventory. We don't have a lot of movement on overall price because people's affordability has been affected. So I think the only like catalyst that would change that drastically is if we saw like a ton of power of sales come to the market, or something flood the market with an insane amount of inventory, which we haven't necessarily seen yet.
Yep.
Yeah, no, that makes a lot of sense. I'm interested to see, because like you mentioned, we had talked about this a little bit before we were recording, what things look like by region, because there's not necessarily like a Toronto market. There's different markets within Toronto. So I'm interested to see what this looks like in kind of the different areas of Toronto.
Yeah. So we have, Toronto proper, its market itself, which we can extrapolate a bunch of like nuanced data from. But then also, if you're thinking about living in Toronto, there's several other suburban markets that you may also be considering in addition to Toronto, depending on your lifestyle, right? Like maybe you want to live in Mississauga. Maybe, I've had a lot of people recently tell me like, I'm even okay to go out to like Waterdown or Burlington or Clarington or Oshawa, as long as I can get downtown within, let's say, an hour's commute or so, because I've got to come downtown twice a week for work or whatever it happens, right? So if we're looking at Durham region performed arguably the most poorly as of 2022. And so I'll show you the peak price to where we're at in the next slide. But right now, average purchase price for Durham, that's taking into consideration like Pickering, Ajax, Oshawa, Whitby, we're looking at about 866. So when you look at this, you're like, oh, Durham's not doing too bad, unless you like zoom out a bunch over the last couple of months and look at these videos. You're like, okay, well, it's kind of stabilized at like this price point that I don't think we're expecting we were going to hit, but we're definitely south of 900 for the average purchase price now. So Durham actually looks not too bad. We'll talk about like house hacking in a little bit, but
yes,
house hacking is not a bad option if you want to go to Durham. Like if you're a millennial right now and you want to get in the market and maintain that affordability, I'll talk to you guys about that in a second, but like good area to look at right now.
We love house hacking, so we are looking forward to that conversation. It's one of our favorites. So.
Awesome. And then there's two really interesting data points on this slide for this month, especially if you're a viewer and you've been like watching me on the channel for 2 years now, you'll know like I was kind of waiting to see this happen, but Peel cracked $1 million to the downside. I believe it was last month. And we hadn't seen, so all of these were well north of $1 million at the peak. right? And then Durham was the first domino to fall under $1 million to the downside, and that was kind of like a big news headline there, right? Like it was the first shoe to drop kind of thing. Then we saw Peel, as of last month, crack $1 million to the downside. Halton still performing, like they had a big swing, but they're still performing relatively well. So we're looking at 1.12 as kind of the average price point out there. Toronto finally looks to have cracked that $1 million average price point, which is a sexy headline. Like I'm telling you, that looks good. I'm like the news should be eating that up. But again, when you take into consideration volume or lack thereof, and a big portion of this is comprised by that like 711,000 average condo price point, you kind of have to put it all into context where like these aren't necessarily driven by the condo market. Most of these are going to be freehold properties, right? So anyways, a very sexy headline nonetheless. I thought it was interesting.
Still put your party hat on.
Yeah. I thought I'd just highlight it. Again, it's good news for people who don't have the 20% down, right? Because as soon as you get over $1 million, the capital requirements are significantly higher than what they would be at under $1 million. So, you know, if you can grab a property for under $1 million in Toronto, and again, you have high income or you have the opportunity to be able to qualify, which is a big challenge for a lot of people right now. But you might be like in this rat race, and you guys have probably heard it a million times. Like, I'm just going to continue to save, and I got to keep saving. I got to keep saving until I get to, you know, the capital allocation that would be reasonable for me to get in the market. But like, what comes first, the chicken or the egg? Kind of thing, right? So now it's like we have this opportunity for breathing room for those people who are like, I don't have a ton of cash or capital, but I can qualify based on my income. We're kind of seeing like the rubber meet the road with that right now, I feel like, in Toronto.
Good.
Cool. And then York region has performed you know, pretty well, stayed pretty flat. So we're looking at 1.285. So just shy of 1.3 there. But again, here's kind of where we're at from peak to current prices. So Durham's come down 28% from the peak. So the average price was 1.234 last February. Peel was at 1.3. We're at 9.93 now. So we've come down about 24% from the peak. Halton was at 1.5. We're at 1.12. So 26% from the peak. And then Toronto, we're at 1.2, and now we're at 9.87. So we're about 18% from the peak. So probably not like crazy surprising numbers. If you look at any realistically Southwestern Ontario market, most of them are down between 20 to 30%. Just kind of depends on where you are. But, you know, like we mentioned before, affordability has also come down about 30%. So that's kind of stayed in alignment for most of that. And then what I thought was really interesting, I went back to look at this. So this was a graph that came out right after COVID from Properly on which suburban markets in the GTA saw the highest growth. And so these really dark regions are the ones that saw the biggest growth. So they had more than 40% growth after that COVID run up. And then you have like, you know, goes down to this lighter green, and then more to like this light blue, which is Toronto, which is like a measly like 16% growth, right? But it was just interesting to look back now and to see which markets have come down the most. And it's kind of looking like, well, you know, if you guys saw a 40% run up, to see these guys come down on the largest scale to the downside. If we look at Toronto, like we came down 18%, but we ran up 16, right? If we look at Durham ran up, you know, we came down about 28. And if we look here, we were between 35 and 48. So I was kind of looking at that to get a general impression of like, you know, the exodus that everyone was called. I mean, it was a sexy word, but like the exodus from Toronto because of COVID, right? And it was like, well, we've kind of seen a price regression from the areas that saw that drastic run up because there wasn't really any other fundamental driver bringing someone to those suburban markets other than the fact that they were like, I don't want to breathe the same air as somebody else in a condo.
And then being able to work from home so they can get kind of out of the Toronto core and go maybe further where they can get some actual land
space and all that. Yeah. So I just thought it was interesting. I came across that. I was like, oh, wow.
And are you seeing a lot of people that maybe, you know, they moved out to these areas and they're interested now in moving back into Toronto?
Yeah.
Are you seeing people like the migration is almost back into the core?
Yeah, I've had a lot of conversations with, even as of last year, we started to have some clients that like moved out to London, and they were like, okay, this is definitely not my vibe. I thought I could hack it, but I guess I'm a city person. So I am starting to see that transition back a little bit. But again, it's like, I don't want to set the wrong expectation. There's not a whole heck of a lot going on. So it's like, are people doing that? Yes, but people are making decisions much more slowly. Like, it's a much slower burn in today's market than what it was out here. People were like willing to they would pick up and move from Toronto to like London within 2 weeks, and they hadn't done any research, but it was just because the market was so hype and they wanted to get out of Toronto so badly. So the urgency and that like burning desire to do that was there. Where here it's like, I really want to make a more informed decision and take a slower position on this time, which I don't necessarily disagree with. I think it makes a lot of sense. Like, you should be doing a lot of research before you purchase a home.
Yeah.
A lot less on the impulse side of things.
Yes, 100%.
Yeah. Well, and you said that the basis of these areas going up wasn't really based on anything other than people just wanting to get out. So had they, done some research and really thought about where they were buying,
yeah,
this
not to discredit any of these areas, because they all have their unique value propositions. But I think when it came to like the whole COVID, I mean, like, there was so much shit going on at that point in time.
Yes.
Everybody was emotional about like not only just finances, like a million other things in life, right? So I don't necessarily know if anybody was thinking with the clearest head at that point in time for many, many decisions that they had made. But if you think about it, it's like, if you move out to a rural area just specifically to have more space, or whatever it happens to be, and then you realize like that ain't for you. We could have maybe not moved out as far. We could have stopped about halfway, got like half the amount of space, and still maybe had, accessibility to walking to coffee shops or whatever it is that you now desire, right? So I don't disagree with people for like pumping the brakes a little bit and making a slower decision. However, the caveat to that is analysis paralysis. And that's where I think a lot of people are getting caught up with, is like taking too much time now and overanalyzing every single detail. And I think there's going to be a lot of people that have a tremendous amount of success, and there's going to be probably even more that look back and go, I should have taken action. I did the research. Like, a lot of people are doing the research, but they'll just never take the action, and therefore it's a waste of time.
Yeah, it's hard when you're not, because obviously we're very in this space. We see trends, we kind of know what's going on. But if you're not quite as deep in the space and you see a lot of headlines outside of kind of what we know in the real estate world, the headlines and stuff can be really scary. So I don't blame people for wanting to take more time and do their education. But yeah, it definitely leads to a lot of analysis paralysis. And we're seeing that with your single family home buyers, but even investors, and whether they're passive or active, we're seeing a lot of that because of the headlines and because of what's happened over the last year. So, I mean, it makes sense, and it is good for people to think about it, but it's kind of swinging.
Yeah, it's like, it's trying to find like that harmony or that balance between like not being too hasty with making a decision, and also not like, and actually taking action and not being like paralyzed into inaction, because it ends up being like you go through this this research phase, or like this like resource gathering is what I would call it, right? Like, you start to gather all these resources and try to make a decision, and without actually thinking about it or sitting down or talking to a professional, and then the moment passes you by. And I don't know when the moment is going to be gone. I do know at some point it will be gone. But I think what it comes down to is like, you have to, like, unfortunately, you have to speak to a professional, and you got to find somebody that you trust that is going to have your best interest at heart. Whether that's my team, you guys, or somebody else, like, you have to have somebody that is integrated in this industry every single day, that's analyzing things and getting their information on that, and then making your decision based on the advice that they're able to give you. Because if you're just going off headlines, I could probably pull the same news article from several different outlets, and they all have a different opinion or different understanding of it, or one has a positive headline and the other one has a negative one. So it's more just breaking down the data to see how it actually affects you, because their job like any marketing company, is to get you to click and read. And if they do that, they did their job, regardless of whether you, right? Yeah, they did their job.
It's entertainment, right? At its core.
Totally.
It's entertainment.
So I thought that was interesting. If you guys look at Toronto, other than like the detached market, and again, I mean, the detached market from an affordability perspective, carrying a $2 million property, especially with today's rates, is quite expensive. So to see that pull back in alignment with the suburban market, I'm not necessarily surprised. You will notice that the condo market has stayed the most resilient. We've obviously still seen a relatively decent pullback. But I think given the fact that we saw crazy run up in rental rates over the last year, and just this is first time buyer territory, right? So when it comes to a buyer stream, you have a lot fewer buyers looking in the $2 million price point than you do at a $700,000 price point, because you've got first time buyers, you've got people who are maybe looking to invest. Like, you just have a bigger buyer stream eating this up from a price point perspective. But it's interesting when we look at the important metrics to see how things are going from like an inventory perspective. So we usually see a pretty decent uptick in terms of months of inventory at the beginning of the year. And we're slowly starting to see this peel back a little bit. But we just haven't seen a lot of inventory. Like, everyone keeps asking, where are the houses? And I'm like, well, until it makes a lot of sense for sellers to come back to market, if they still have the affordability to hang on and there's no like real internal motivation, they're probably not going to sell at a discount. You know, I don't think we're going to see a drastic run up of inventory this year. Like, I can say, when do I think we'll see the most inventory? I think we're coming into a season where we're going to see the most inventory. It doesn't mean it's a lot of inventory. Those are two
all relative.
Yeah, those are two separate things, right? So we're starting to see this come down a little bit. The condo or the freehold market is actually slightly more aggressive with eating up that inventory than the condo market right now. So we'll talk about that again in a second. But I wanted to talk to you guys about like actual home prices and then sales. So for the last kind of half of 2022, we saw the average home price, and this is across the GTA, not just Toronto. So it takes into consideration like everything on the Treb board. We saw it between like $1.50 to $1.75 or so. We actually cracked that. We went down from December to January. So that usually looks to happen about like 30% of the time. So not super unsurprising, but we went down about 1.2% for average price across the board. And then if we look at months sales for actual January over the last 20 years, we're the second lowest. So we had a total of 3,100 trades that happened across the entire Toronto board. So everything that's under Treb. Whereas if you look like, you know, 2022 and 2021, we're doubling those numbers. Yeah. So, and again, those were also crazy numbers. Mm-hmm. So if we look in, so if we look into like a more normal, like let's just call like a more normal year, we're probably looking somewhere around like 4,300 to 4,500. 6,900 is also not normal. So we can't really compare this to this, because this isn't normal either. This is crazy as well.
Mm-hmm. Yeah. So if anything, we're really low.
We're quite low, but I think it looks really bad if you're comparing it to 7,000 sales.
Yeah. It's not as bad as it looks.
Yeah, if you're comparing it to, you know, 4,500 sales, which would be considered more normal. Like, if you look at this, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 of the last 20 years that have fallen with the number 4 in front of it. Mm-hmm. So let's not compare it to something that starts with a 6. Yeah, you know what I mean? Like, let's just not do that.
Kind of an outlier.
Yeah, exactly. So I think, you know, we're definitely low, but it's not as bad as what the media can make it seem. Yeah. Right. Yeah. And then sales to new listings. This is also interesting. So we were the 5th worst, which is not actually that terrible if you actually look at the last couple of reports that we've done. We had 3,100 sales and we had 7,600 new listings come to market. So about 40% of the new listings that are coming to market are actually selling, right? So you still need to take that into consideration if you are looking to sell your property. It's we might see, you might see some areas where there's like an uptick in activity in comparison to what we saw for the last quarter, but like, don't just assume an uptick of activity means we went back to February. It might mean that 40 days on market went to 32 days on market, or it might be, 50 days on market went to 30 days on market. So you still got to give yourself a reasonable amount of time to get your property sold on today's market for sure.
Right. Yeah, that makes a lot of sense.
And then just so you guys know where we're at from like residential listings, orange is rental, blue is the resale market. So we always see on the back half of the year, inventory typically trend downwards, like especially towards winter. And then we're starting to see that again. We're starting to see that kind of trend back up. So that's why I was saying, went ahead a little bit, but that's why I was saying, we're going to see more inventory pop up, but it doesn't mean it's going to be a lot of inventory. No, we're just trending upwards right now. And right now we're kind of seeing the rental market trade sideways. I'm actually the most interested to see what happens with the rental market this year, because we have the news article was 35,000 new like pre-construction condos coming to completion this year. So a lot of people were freaking out about like, oh my gosh, we're getting all this inventory that's coming to the market. Mm-hmm. Are we going to see all 35,000 come to completion? No, there's gonna be a bunch of them. Never. It's like, it doesn't just work like that. So we'll assume that 10,000 of them get delayed or so, and maybe 25,000 actually come to completion. Well, the reality is some of those people will sell, but the bulk of those people, if they can actually afford to close on them, because that's even another challenge, is are people actually even to close on these condos? They're going to try and sell them on assignment, et cetera, et cetera. But if someone has the financial wherewithal to actually close on the condo, the likelihood of them closing and then just going to put it back on market for sale is unlikely. They're likely to actually rent it for 1 year and then make a decision on it. So I'm curious to see what happens from a rental price perspective if we actually see a decent amount of inventory come into the rental market, because hopefully that levels things out a little bit on the rents side of things, because tenants have been really feeling the squeeze. They were feeling really good during COVID, and they're feeling not so great after COVID with the way that things went. So I will report back later. I don't know what to think now, but at the end of the year, I'll have an idea of what happened to the rental market.
Yeah, it's I know even in Ottawa as well, we have any rental that comes up on the market, you get multiple people wanting to get into that rental, like good people, good quality renters. And there's just, in Ottawa, we just don't have enough. Yeah, we don't have enough inventory. So there's, we have waiting lists. Like we were looking at a building right now that actually we have under contract, and there's a 35 tenant wait list to get into this building. Mm-hmm. So yeah, so we need that inventory, right? So it's not that it's going to be a detriment. And in Ottawa, anyways, it's not going to be a detriment. It'll help with that.
That was a great segue to my next slide, which you guys had no idea about. But this also just came out, the StatsCan announcement for the number of condos that are owned by investors in Ontario. They said that 41%, I think it was 41 or 42% of the condo inventory in Ontario is actually owned by investors. So I'm actually curious to know your guys' thoughts, because it's like this, I guess like double-edged sword, where a lot of people are like, that's a ridiculous number, and these investors are buying up these properties, and that's why housing is so unaffordable. But when you look at it from the lens like we just talked about, where there just isn't enough inventory, and then you have 35 people waiting to get one particular property, like what side of the argument are you actually on? So I'm actually curious to know your guys' thoughts on this.
I think what it comes down to is there's just not enough inventory on either side of it.
Yeah.
So I don't see there being, I guess we don't have as much, we don't have as many condo buyers in Ottawa as you do in Toronto. So sure. I know that there's a lot of people who buy condos in Toronto. But when I think of Ottawa in particular, I don't think there's going to be enough investors in Ottawa that are going to be buying up these single family homes to really make a big enough difference for the affordability. So I think if you were to say like, no more investors allowed to buy any single family homes in Ottawa again for the next 5 years, I don't think that's going to make a big difference on the affordability of a home.
Yeah.
And I don't know how well that translates into the condo market in
I'm kind of
Toronto.
I'm of the same mindset. Like, I don't think that investors aren't looking to pay the highest price for condos. I can tell you that for sure.
Exactly.
I've dealt with them many, many times. I don't think they're out here trying to pay peak prices for condos.
No.
If you have an investor looking for a single family home, they're most likely buying it at a discount.
Yeah.
So that they can do renovations to it. They're not buying it to rent it out. And the ones that are buying single family homes to rent out, there's not a whole lot of them.
Yeah.
Most investors are looking for apartment buildings.
I agree with you on that. And I think that maybe there's this misconception because, like, honestly, if I didn't own a property and I wasn't in the real estate industry and I didn't understand how this went and I just read news headlines, I'd kind of be like, screw these investors too, because I don't have, the same scope of reference that like you or I would, right? But when I know, like you were saying, Jeff, if for even like a single family home, as somebody who has purchased investment properties in the past, I'm not usually going for the turnkey thing. I want to go for the value add opportunity and if I was to sell that property when it was turnkey, it would typically be the first time buyers that want that housing stock because they don't have the cash available or the resources or knowledge to typically take something that requires that much of an investment or improvement. They're like, I can't really buy these properties that require this capital to fix up. I need something turnkey. So it's like we kind of have to look at it, as long as we're not all being greedy, it's like, how can we kind of work together? And so when I look at this number, I'm like, is it high? Is it low? I don't really know. Like, I'd need a little bit more, little bit more information about it. But I think you have to choose the lesser of two evils. As a renter, do you want to deal with a mom and pop investor where you have a conversation with them and you're able to negotiate and things need to get fixed and it's done, or if you need to make changes or amendments to the property, you have a direct contact? Or would you prefer to rent from an institution that has like these purpose-built rentals where you have guaranteed rental increases every year and everything is just more systematized from a business perspective? So at the end of the day, a renter is going to be a renter, like unless they decide to choose to own, right? But we know 33% of the population typically rents. So you have to choose. Do you want to deal with a mom and pop investor, or do you want to deal with more of institutional owner of the rental property? Like, it's kind of up to you.
Or government housing.
Or government, or government housing. I was going to go down that angle. I just selected the two that I wanted to talk about.
Whoa.
That's awesome. But yeah, no, I thought it was interesting. This is going around a lot in Toronto right now. And that was kind of like my 2 cents on it, is like, I think it boils down to, do you want to deal with you guys or do you want to deal with bigger corporation kind of thing?
Yeah.
Somebody's got to provide the rental housing stock at some point.
Yeah, exactly.
Right? So this is kind of what I wanted to chat about going in and just kind of wrapping up with like the house hacking, but kind of like the three main levers from affordability. Because I think right now that's really the one. I don't think the desire for somebody to own a home has changed. If anything, I think I've seen people start to come around a little bit more to be like, okay, well, this just is what it is. It sucks. Rates are high, but I've kind of assumed the fact that this is the reality that we live in. And so I think there's kind of three main levers for affordability, right? It's like we have interest rates, we have the overall purchase price, or we have income. And I think right now it's what we know is these are probably going to stay high. Like if we're just looking on like a 6-month scope for what's going to happen next for anybody watching, they're probably going to stay high. I don't think we're going to see much of a change either way. I think we're probably going to be in and around the same rate environment. I think if these stay high, these again, like, maybe they change slightly, but I think we see more pricing stability than we do movement one side or the other. I think we just continue to trend sideways. And so therefore, if neither of these levers move, then the only thing to improve your affordability becomes the third lever, which is your income. Yeah. Right? So when people are like, okay, well, I just don't like the houses that I can afford right now, because that's mainly what it is. It was like you could afford these sexy houses before, you opted not to purchase them at that point in time for whatever reason it was. And now you've gone to see what your affordability is. And you were like, I could have bought a detached house, but now all I can afford is a condo. How can I get back to a more reasonable property that I would prefer? And so I think the only way is, unless you're watching this video and you're going to get like a 30% raise or 50% raise, like all of a sudden out of the blue, which is not common for somebody who's maybe a traditional employee. If you're self-employed, maybe a different story. But this lever is fixed for now. And so is that. I think these work together. So these are pretty fixed, I think, for the next 6 months-ish or so. And so I think the only way, if you want to maintain that affordability, especially for like our demographic, is using some type of house hacking option to hold that house for you to maintain that affordability. And so what I did was, in a lower rate environment on the left side, I took into consideration like what a $1 million house at 2.5% interest would cost you to float for the entire month, right? So it'd be about $3,500 a month for the mortgage. And then I said, with property taxes, utilities, and insurance, let's say another $1,000 on top of that ish, right? So February 2022, we pay $4,500 for the $1 million house, and we have access to the entire thing. And this is what it costs us to float it. And it is what it is. And now all of a sudden, this becomes, if we maintain this, this is a 2-bedroom condo, maybe, after we take into consideration maintenance fees and all of that kind of stuff. So you go, had a nice detached house, same affordability, 2-bedroom condo right now, even though the purchase prices come down and all that kind of stuff. So we just traded asset classes. But you're like, I'm watching this video, how do I actually get the house? You increase your income one of two ways: at your work, or by somebody else utilizing their income to subsidize where you live to maintain this affordability. And so if we go to the right side of the chart and we look at the current rate environment, the carrying cost for a $1 million house at 5.64, our property taxes, insurance, and utilities are pretty much the same, provided there's some inflation, but we'll say they're about $1,000 a month one way or the other. But the mortgage has gone to $4,950 instead of $3,500 now. So we're 25% more expensive. And this is not taking into consideration that the same house has probably dropped 20% in value too. I'm just looking at the same purchase price. But the way to offset that, to get you the $4,500 monthly expense to own the same house, is by rental offset, and by purchasing something with the rental suite in the basement and holding on to it until you're able to refinance, or rates come down in the future, or you need access to the extra 500 or 600 square feet, whatever it happens to be, and then removing the tenant from there and not calling me to sell and spending the money on commissions, land transfer tax, all of that kind of stuff. So to me, when I look at this and I look at this, this is the easiest, quickest option. A lot of people don't like it because they don't want to be landlords and they don't want to share their space with somebody else. But you have to make that, again, like we talked about, it's all coming full circle.
Yeah.
What's the sacrifice that you're willing to make? And this is kind of the quickest, easiest way that I see for you to stay in the same asset class. You're losing some of the space in potentially the basement for the rental suite or whatever, but you can still get the house that you want and hold on to it for later. So if anybody's interested in like a full-on breakdown, I did a full breakdown for Oshawa and Toronto for another video that's on the Canadian Real Estate channel. So you guys can check that one out.
Yeah, I love this. This is actually one of the ways that Jeff and I got into real estate investing, was through house hacking.
Yeah.
We bought a bungalow. We actually lived in it, did the renovations, converted the basement to a legal suite, and then lived upstairs and had the tenant in the basement. Eventually, like, refinanced it, moved out, and bought our now freehold home.
Yeah.
So to me, it's one of the best ways. I mean, for I'm speaking from like an investor lens, but really for anybody to get into the housing market, to me, this is one of the best ways to do it. Obviously, that you have to have that conversation about being okay with getting a little bit uncomfortable, and maybe, you don't love sharing your space, but especially if they're separate, you hardly know that your tenant's in the basement, right? Like, you have two separate spaces.
Yep. So
we have this conversation, especially with people that want to get into investing and buy their first property. But they, maybe they don't have the affordability. This is the conversation we have with them. So I love that you brought this up, because this is the exact conversation that we have with a lot of our like newer investors and how they can get into the investing world.
Yeah. I mean, like, you think about what it's going to take for somebody to go make an extra $1,500 a month right now. And it's like, again, when it comes down to the sacrifice, it's like, unfortunately, like whatever way you shake it, the numbers are just the numbers. Like the math is just mathing to work out this way, right? So if we're like, I don't want to be flexible, I don't want to go the condo thing, I don't want to take a part-time job or work extra, maybe the money that I'm making doesn't even necessarily count for me to be able to qualify, because the bank might say you haven't been doing that work for long enough for us to constitute that as something that we would take into consideration or think reasonable. Well, the easiest way to do that then is to borrow somebody. And when they say like other people's money, like a lot of people are like other people's money to buy real estate. It's like, well, other people's money can also be buying a unit with a secondary dwelling and utilizing their money to help you get the house that you really want for a shorter period of time. And then doing the long-term approach to see, and I guess a question that I would have for you is, do you guys still own that first property as a rental, like duplex?
We do.
We do. And it's one of our favorite properties, actually. It was a big learning property for us, but we still own it. We've now rented out both the upper and the lower. We rent out the garage. It's got a great property for actually future development that we didn't even realize at the time that we bought it.
Yes.
So it's still a rental property that we own. It's profitable. And honestly, that house hacking piece is what allowed us to get into it.
Right.
And it's probably one of the best decisions we've ever made. So.
Yeah, it's a short-term sacrifice, honestly, especially for us and our demographic. It's like probably the quickest and easiest thing to help you increase your income and scale your portfolio at the same time. Because it's like, I own the thing and stop renting, potentially even reduce my out-of-pocket expenses depending on what my rents are, have somebody else help me qualify. I get to know the property. I can optimize the property, paint it, decorate it, whatever I need to do to make sure that I get the rents when I move. And it's like the easiest jump off point, I think, to scaling a real estate portfolio, should you so choose to take that path. If you don't want to take that path, you can keep the same property or ride the market back up whenever the market recovers and sell that property and move somewhere else that you think is more favorable for you if you're buying off the peak.
Yeah. Even if your plan isn't to become a real estate investor, that was our plan, but even if it's not, now you have an asset that's worth more than what you would have been able to afford, and you have someone else helping you pay down that mortgage.
Yeah.
So now your equity in the property is becoming bigger than if you had bought something and you weren't house hacking and someone else is helping you gain that equity.
Yep.
So it's
I did the exact same thing. For me, it was the condo, and then it was the house hack, and then we transitioned into the freehold. So, for you guys, it seemed to be in smaller suburban markets, it's usually like the one, and then you scale to your dream home. In Toronto, it's usually three. It's usually the small thing and then another thing, and then you get to the thing that you really want.
It actually did start with the small thing.
It did.
So we had a townhome that I bought back in 2012.
Okay.
Right.
So
we refinanced that. We actually kept that as a rental as well, but refinanced that in order to purchase the bungalow.
There you go. See, and that's like the whole strategy that we do on my team, is helping to build that out with people. And like, what does that look like for you? So it's normally like, what are the 3 steps on this property ladder that we need to do? And, using historical averages, how long would it take for you to be able to do those transitions? And if we beat it, which we have for a lot of people recently, because the market has been awesome, amazing, and you get your dream home quicker. But if we don't, are you okay with a little bit of like overage and variance of this taking you another like 3 to 5 years longer than you had hoped? And if the answer is yes, like, let's build the plan out, baby. Let's do it.
Yeah. So can confirm Emma's plan works.
Awesome. Thank you.
We followed the same plan. We didn't even know.
It's a proven system for sure.
It is proven for sure. So, all right, well, we're running up on time here. I actually have another video coming out specifically on the condo market. So let's leave this particular update with more of the freehold market and some strategies that we just talked about there. And if anybody is interested in knowing the specific details of like the Toronto condo market specifically, there'll be a second video available for you guys there. And I'm going to break down everything in detail in terms of my expectations and what the heck is going on in the condo market.
Love it.
Love it. Amazing. Thank you so much for that, Emma. That was an incredible update. And if people want to reach out to you and chat a bit more about your strategy, house hacking, the Toronto market, how can they find you?
You can find me at Pace of Base on Instagram. That's my Instagram handle. Haven't changed it since I was DJing a long time ago. So there you guys go. Or if you want to get in contact with me, there's a link below that goes directly to my calendar. So you can book a discovery call with me and I can figure out how to help you there.
Perfect. Make sure you do it because like we said, the plan is proven. We didn't even know before this call, but the plan is proven. And yeah, we're Jeff and Dakota. You can find us on Facebook. Our company is Opinicon Investments. We're on Facebook, Instagram, and our new YouTube channel. So check out some of our videos.
There you go. Love it.
Yeah, amazing. Thank you for the chat today.
Chat with you.
Thanks, guys.